Hi, welcome to Market Alert for Tuesday, the 11th of June 2018. So yesterday the headline is morning market melt up, momentum fades, but bonds and bullion slide. So let's have a look at this in a bit more detail, starting off with the Dow. We'll have a look at the daily chart. Yesterday we saw the market gap higher. It traded higher and then fell off towards the end of the session. The volume is still incredibly poor in this market. What I would be inclined to do here, as we appear to have a bit of momentum in this market, is come to the recent high here to the left, down to this recent low, and you will see why the market is struggling at this level. 26,202 is the figure. And the market needs to get back above this if it is to attempt to get to the recent high to the left here, which, if we just draw this in, you will see is 26,607. So we've got a bit more on the upside there before we get this sort of double top, recent double top. Of course, it's not the all-time high. That, if we look at the weekly chart, is out here. And you can see there at 26,953, but heading back towards there at the moment. As I keep saying, they want this market up and keep moving to the upside there. So in the pre-market session yesterday, we see prices sideways, and then once we get down towards the 200 bar moving average, the market's tested, and then we see the so-called melt up, this same pattern now that we've seen for the last couple of weeks. The market higher in the pre-market session, grinding higher. We've gone from moving lower to moving higher in the main event to the opposite, and then we've got that again, the fight going on with the bulls and bears when we get to the main event, and eventually the market moves higher. The market then moved lower, and I think this was due in part to the helicopter crash in Manhattan. It sparked a bit of sort of so-called terrorist fear, and the market moving lower, running out of steam. The market trading down to Friday's close, but then back above the 200 bar moving average very quickly before the close, and then we had a sell, which brought the market back through the 200 bar moving average. Overnight, we can see that prices now are sitting at the 200 bar moving average and above the DP. So we're bullish so far for this market. Today, only the UK, we've got average earnings index, 3-month 2.9% forecast, 3.2 previous. And speaking of which, let's move on to the pound for yesterday. We'll start with the daily chart. You can see the pound was down. Why was the pound down? Well, if you remember from yesterday's alert, we spoke about this little gem, the GDP month on month, and as I said, Brexit would be blamed for this if it came out lower than forecast, and that is precisely what happened. You can see it here. Brexit hangover leaves UK nursing worst monthly contraction since 2016. Utter nonsense, because if you actually look at the oil price, you will see that we've seen a significant drop in the price of oil over the last month or so, and this is a good barometer of how the world economy is doing as well as also obviously crude oil stocks, etc. But when the oil price is down, we've got the global slowdown, and also don't forget we've got the inversion of the yield curve, which didn't happen in 5 minutes. This has been going on a lot longer than Brexit. So all things combined, it isn't Brexit. It's got something to do with it, but it's amazing how this is being used without telling the whole truth and the whole picture of what's going on. So the pound was lower, and if we look at the intraday, you'll see everything was fine and dandy until we got the news at 9:30, which is here, and then this just sent the pound to the downside, down to the S2. The market then saw the profit taking coming on the short side, and then started to reverse. We got selling pressure here, and then the market moves higher, and then some more selling pressure, but eventually makes its way back 76% of the move, just under the 200 bar moving average. But overnight, again with the Tory fight going on at the moment for the leadership contest, it's putting some downside pressure back on this market. So through the 76%, we hit the top of the 76% there in the bigger time frame. So what I would be inclined to do is just to have a look from this low to this high and see how the market fares if it moves lower down to this level. We can certainly remove this one at the moment. So that's the pound, still fairly quietish at the moment. Meanwhile, Bitcoin is in a bit of a sideways range at the moment. It isn't actually selling off at this point. It's just treading water and back above the 200 bar moving average after the short side trades here for this market. You can see there we've got a bit of a double top scenario, a bit of selling there. And inside of this detail yesterday, the market was quiet. We had a buy followed by a sell, neither hitting the target, and then all of a sudden out of the blue we see the market ramp back above the 200 bar moving average here, where prices have stayed, albeit in a sideways move here, which you can see getting a bit narrower. So on the whole, fairly quietish at the moment and range bound, but a good range nonetheless. If we have a quick look at the detail here from the high to this low, if it will let me, I just need to remove this for a second, make life a bit easier. So 666.68 range there. It's probably just a bit more, but yeah, so all the sixes for this at the moment. So a decent range in the daily chart there. And then finally, let's have a quick look at the implied volatility. We can see this has dropped with the so-called melt up that we saw yesterday, down at 1390. So healthy in the event that the market turns around and goes back to the downside. There's a lot more here for the upside of this implied volatility here if they do turn around and move to the downside. And then finally, keeping abreast of what's happening with Deutsche Bank. Yesterday it was bullish all the way through Europe, and we see the low of 680 to 693, so off the lows of Friday. But again, this is just purely an academic exercise, just to see if anything happens, if it does hit at that 640 that Charles Nenner spoke of a few weeks ago in the interview he did with Greg Hunter. Okay, that will do it for this one, and let's see what happens today. It's Tuesday. Markets can be fairly quietish on a Tuesday, as everything is, all the news from the weekend is factored into the market, but we'll see. And with that, as ever, thanks for watching. See you in the next one.